Hey there, good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. July 28th. Let's get started with the charts. Look at this, guys. We are trading pretty darn well this morning after this sell-off from last week. We're currently at $103.84. Our support's coming in below us at 103.40. Could go as low as 102.60. So we're maintaining the same support as we did last week. Our resistance is coming in above us at 103.80, but it looks like we might be nudging above that. So here's the reports. Jobless claims worse than expected, bond friendly, and the 7-year auction came out. Shouldn't see any too much major movement from that. GDP is coming out tomorrow. Could be a helpful or hurtful, but I still kind of think we're going to trade in this range. So I'll give you my predictions in a second. But to kind of quantify where we're at, Freddie Mac reported the average interest rate to be at 3.57% at 0.5 points. Sources down here at the bottom. We were trading on average about 102.80. We're currently trading at 103.84. That's a dollar difference. So to kind of quantify where we're at now compared to our averages of last month, we're better by $1.04. So that's about a point. That means if someone was paying a point last month, they might be getting a half point credit this month. So anyway, for about the same rate. So anyway, things are looking pretty good. Analyst outlook, they're both really consistent. They're neutral on short, they're neutral on long. They don't think bonds are going to continue the downward trading channel that we saw last week. They don't think it's going to get better either. So here's my prediction. Bonds did hit my expectations pretty close from last Thursday. So here's what I'm going to forecast, though. I'm going to bump it up a little bit. I'm forecasting trading to be about 103.40 to 104 until your update on Tuesday. So what that really means is we're at 103.80 right now, you could see, if you wait, I think you could see the bond market, especially with reports coming out tomorrow. You could see yourself paying maybe another extra quarter point, 3/8 of a point worse. But you also could see yourself, maybe getting a quarter point better. So I don't think the trading's going to really, be anything too crazy through next Tuesday. So you can see some fluctuation, as you always will, but I don't think it's going to be anything, worth writing home about. As far as your 30-day lock considerations, here's the scoop. If it was me, I kind of get a good feeling right now. I would consider floating unless you really need to lock in your loan in order to close it. I think we are developing an upward trading channel, so I don't want to get too optimistic. But and realistically, guys, even when or if we do develop this upward trading channel, I don't think it's going to take us too far up. So at any rate, if you want to play it safe, always lock. But I have a gut feeling we could see a little improvement over the next couple business days. Anyway, that's it for your outlook and forecast. We'd like to hear from you guys. What are your thoughts? You want to write down below. I think this is what's going to happen, Scott Criss. So do that. We'd love to hear from you. And everything likes to be liked, so does this video. You know what to do. And if it's your first time checking out this page, at the top left up here, you can hit subscribe. You can always unsubscribe later, but not a bad idea to subscribe. You can kind of keep a pulse on what's going on as you're thinking about buying a house or refinancing. And then, hey, once your loan's done, unsubscribe until you're ready the next round. And if none of this made sense to you, these charts, me trying to quantify like Freddie Mac last time and average rates and where we're at now and why these charts are important, it's okay. It's a little confusing at first. At the top right, click this little guy scratching his head, and that'll take you to Mortgage Bonds 101, and it'll teach you the basics. That's it for now. Have a great weekend, and we'll see you next Tuesday. Bye-bye.